This is the way.
This is the way.
This is the way.
Hey guys, welcome to the weekend update. I've got my coffee. I'm turning that down. Let's get into it. We've got a lot to talk about. Number one, I'm going to put a infographic in the body of the dashboard, and then we'll probably post it this week, just about the life cycle of someone looking for a new home. That there ties in the Sacramento A's, formerly of Oakland, soon to be Las Vegas. I want to really get your feedback and tell me if you agree with the 10-week timeline. I don't. I think it's much longer, even though there's more inventory. Please check out the infograph. Let me know your thoughts. Are you seeing buyers take about 10 weeks to get into escrow or more? The reason I bring this up, and I've talked about this in recent videos, is how many more homes are on the market than buyers in the market. And one of the things I'm starting to see is greater success circling back with buyers that recently got out of the market than hoping more buyers enter the market right now, when that just doesn't seem to be the trend. So that's my Sacramento A's, formerly of Oakland, moving to Las Vegas. That's many years in the process searching for a home, and I don't think it's any different with today's residential home buyer. Okay, let's get into the top stories. As I mentioned in my preview earlier this morning, big drop in the Dow today, S&P, NASDAQ, across the board, due to threats of massive tariffs or big or huge tariffs on China over the, I think, what does he say? They're holding the world hostage with their rare earth minerals. So the bigger picture of this video and the tease with Mandalorian, more on that, that the way things go is that bad economic news generally brings better interest rates. Did that happen? Well, let's take a look at the board today. We've had 24 banks, including ours, reprice for the better. One outlier here said they repriced for the worse. It wasn't us. Not sure who it was. I think I have an idea, but I'm not going to mention it because I'm not 100% sure. But we have a yield that's down 10 basis points on the Treasury. The 10-year yield is largely what impacts your long-term interest rates, like 30-year, 15-year fixed, even some ARMs. So we are seeing a flight into Treasuries right now. The yield is going down as a result of all the money coming out of equities and stock market, and that is driving interest rates down. Now, if you always want the narrative without my video, just go ahead and click on the weekend update dashboard. I'll take you through it. Scroll down and get to the market summary. This market summary is going to give you in real time what's happening. How we started off a little bit weaker because of some concerns this week about politics in Japan and the potential selling of US-backed treasuries. Put some pressure on yields, and we saw rates tick up. Even as recent as yesterday, we were talking about rates being higher on the week. Well, today changed everything. You can click on the market summary, get all the news, and find out with the story here, mortgage rates are the lowest they've been since the Fed made the actual rate adjustment. So pro tip and another reason to save the weekend update dashboard. You can also go to our new website location for the weekend update, weekend WKND up.com or weekend WKND update.com. That's going to get you right here. Save that to your bookmarks. You'll also then get top story mortgage. Like I just said, mortgage rates lowest since Fed Day. They're still above 6.25%. And remember, they're not projected to be below 5.9% until the end of 2026. Here is the homebuyer's journey that we're going to post, and I'm really curious on your feedback. 10 weeks for buyer cycle, a little bit shorter if you're 8 weeks. It says if you're a repeat buyer, and 10 weeks if you're a first-time home buyer. Amount of homes viewed between 10 and 8 respectively. Would love your feedback on this. Is this correct? Let's check with the professionals like you. Let me know. Finally, a couple other top stories. I want to give you the tax bracket that were announced this week. Taxes are probably on the brain of most people if you did file an extension. So we saw some increases in income limits per tax bracket. We saw slight increases on the standard deduction for both single filers and husband and wife married filing jointly. remember something, that part of the buyer life cycle, in fact, I'm going to go back to it. Market conditions, financial readiness, buyer decisiveness. And one of the things that we do to help contrast why someone maybe should make the move now instead of waiting until later, especially with rates not being projected to be much lower than they are today, is the tax incentive. So you have the rent, you're throwing that away, but you also just likely filed your tax returns either in April or finishing that up now. And whether you got a return or had a liability to pay, it's a direct correlation to your write-offs. So we show all of our buyers, whether they're buying up or a new home or they're buying their first home, some of the tax advantages to owning relative to a standard deduction. This goes on every mortgage coach analysis, whether it's a total cost or a rent versus own. Just something to think about. I'm dropping the link for the updated tax income limits for 2026 right on the dashboard for you. A few other stories, and I think this is definitely worth a watch. I'm going to play just a snippet from Chris Waller, potentially your next emperor of the Fed. That should be in, I think Fed Chairman Powell will be replaced next year. And this is someone that could be doing it. I want you to hear what Chris Waller has to say about inflation, mainly related to tariffs, and if wages will keep up with any of that inflation related to tariffs, rate drops, and private credit. Listen to this.
And if that's the case, you're not going to get the typical thing that people are afraid of with like tariff type inflation, is that there's a second round knock-on effect. Prices go up, workers demand higher wages, those wages get passed through, and you get these kind of wild price spiral, wage price spirals. That's not happening. We're not seeing any evidence of that whatsoever. So forget about any second round effects from.
Okay, so Chris is talking about a second round of inflation because inflation will put pressure on wage growth, but the economy and the employment data is not supporting any future increases in wage growth. This reminds me of how home prices outgrew wage growth in terms of performance and appreciation during COVID. This is basically telling us that we have no Jedi coming to help folks deal with the current amount of inflation we're seeing, because they don't expect wages to increase in line with that inflation. That's going to put more pressure on potential buyers who are thinking, I didn't get a pay increase, everything else that I bought or that I need to buy is more expensive, including a home. How am I going to make that work? Again, it's a reason that 9 out of 10 of our loans right now on the purchase side are having some form of a concession from the seller while the equity is there. We're seeing more homes come on the market that were purchased towards the end of the pandemic or after, and those folks have not seen the kind of appreciation that would warrant the ability for a seller who would mainly be giving up if they purchased post-pandemic and they bought a home. Most of their equity in the home now is from their down payment, which likely came from the proceeds from a sale of a home that exploded in value growth during COVID. Final thing here, and again, in line with the way Trump administration begins layoffs of federal workers amid government shutdown. We have some direction from Fannie Mae and Freddie Mac on potential folks that are impacted, aka work for the federal government. There are no changes to underwriting guidelines as of right now, but starting November, if the shutdown continues, additional reserves would be required for folks that are directly impacted by the shutdown. Okay, guys, so there's your update. We've got some changes also that I want to speak to in the world of ADUs. This goes for purchases and refinances. So maybe you need to rent that ADU to the emperor. You might also call your mother-in-law or father-in-law the emperor. Hey, I don't know. What I do know is that now, both with Fannie Mae and Freddie Mac, you can use ADU rental income to qualify for the purchase or a refinance. It's another reason, as if we needed another one, why ADU homes or ADU ready homes are so attractive. I'm going to drop a product spotlight to our renovation for purchase and renovation refinance home loans down in the dashboard this week. It's important for you to understand that we can do purchase loans for folks that want to put an ADU on their home. We can use future value and future rents to help them qualify. So talk about another value proposition up for ADUs and the ability to have a lending partner that can do construction loans for ADUs. Finally, guys, thanks for watching. I want to make sure that you understand when I talk about bad news in the economy, there's a mindset to that plays into potentially improving interest rates. And we have to be careful that we have a high enough consumer confidence and low enough rates to get people into homes. And as we teased in the beginning, the Mandalorian movie coming out, I was a big fan of the series. That comes out in May. Here's just what I would encourage you guys. Wait for the movie. Don't have your clients wait for the move. If it's 10, 12, 14, 16 weeks in the market, make your move now. Rates aren't projected to be much better by the end of next year. And think of all the taxes you could save and rent you would have paid. Thanks for watching. Make sure to drop a like on this video if it's been helpful. Subscribe to our Lending Perspective YouTube channel. Share it with colleagues and certainly clients. Take care. Talk soon.